Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. If you want to see this show, go to YouTube, Jeff Barton, the Mortgage Voice. I'm there each and every week as you see me here, or you're listening to me here. But if you want to see me, you can go there. We're also on 8 different podcasts, from Google Music Play to iHeartRadio to Spreaker to several others, all the big 8. And we really appreciate their help in promoting what we do here. And what we do here is try to help you figure out what is going on with your refinance, what is going on with your mortgage purchase. I know it doesn't sound like the most exciting topic for a radio show, but it is. And we get a lot of good feedback, and people who do not have information. I get a call from my LinkedIn. The LinkedIn show is called The Mortgage Minute, and that's on LinkedIn and Facebook each and every day. As it's about a minute and a half long, and we bang out a bunch of facts and figures and opinions. But they said to me, you know what, you think that is boring, and you think that, what you're saying isn't important, but there are millions of people that have no idea about what's going on in either mortgages or in the real estate market or in any market having to do with what they want to do. They want to raise a family. They want to get into the housing market. They want to try to maximize these really low interest rates in order to get the best bang for the buck. And so for those people, yes, this is an informative show. For the savvy investor, we bring great guests on the show each and every week. We're going to do that this week too. We have 3 different guests from 3 different places within the industry to talk about their expertise. We have a lender that's coming on to talk about some of the non-QM and some of the outside of the box, outside of Fannie and Freddie type loans. We have a great real estate agent from the IE, Inland Empire, LA border. And so if you are out there and you need this type of information, give us an hour or give us 3 or 4 minutes on LinkedIn or YouTube. I'm Jeff Barton. And again, The Mortgage Voice is the name of the show. And again, thank you very much for checking in with us. Rates. Okay, the rates are just unbelievable yet again. And when we get into this point, this happened about 2 years ago. The rates were, I think they were in the low 4s, 4 to 4.5. Let's just say it was like that, maybe 3.75 to 4.25, in that range. And we were saying at the time, we've never seen them this low. They're never going to be this low again. We're going to see the uptick. What happens is after a month and a half, where the rates just kind of sit there, people get tired, or they get used to hearing that, hey, you know what, these are smoking rates. But in their mind, they're saying, well, it's been like this for a long time. Maybe they can go even lower. Well, because I'm in the business, been in the business 25 years plus, I'm thinking, no, they can't go lower. Well, who's wrong? Not the consumer, me, I'm wrong. And they have gotten lower, and they may go lower still. And so if you're out there and you're thinking, well, maybe I can get, a 2.25% 30-year fixed rather than, and let me just quote a couple of these. Okay, the rates today, 30-year fixed rate, 2.92. The 15-year fixed rate at 2.61, and the FHA at 2.50. Jumbo products still below 4% at 2.92. Okay, so as I said, if you were in the crowd listening to me a year and a half ago, I have to eat some crow and say you were right. Rates did go lower, but if they went lower because the plan in any disaster, in any financial problems that the country has, and we went through them in 2008, so I know about it. And the country goes through recessions basically every 7 to 10 years. The cycle, and you can go back into the history of the financial sectors in this country and just see it. Every 10, maybe 11, maybe 7, we go through a financial crisis. Nothing like we did in 08, and certainly nothing like we're doing now. This one's different, only that it's not about the system itself. It isn't about assets that were overblown or bubbles or problems in the banking sector. No, this was a man-made, I guess, disaster because everybody shut it down because we wanted to, obviously stay safe and try to recover from the pandemic out there. And what that means is that when this happens, the economy runs on cash. cash comes from your house. I want to quote a number here. It's astounding, really. We were talking, we're talking a little bit about reverse mortgages off air with a couple of my colleagues, and we're talking about the amount of baby boomers coming into that arena. How many baby boomers, what's the worth of their houses? And I actually have it here somewhere, if I can dig it up. Just give me one little second. I know this is great radio, right? Me reading. Oh, here it is. Okay. So there's a record high senior housing wealth, increased by 1.6% in the first quarter of this year. Now, this is before the pandemic, right? Right. Okay. But the number is $7.54 trillion. That's people over 62 and the amount of equity they have in their house. And think about that for a second. That is some big money. Now, I know the trillion-dollar word has been thrown around a lot. And like the billion-dollar word, which again is an astounding amount of money, when you get used to hearing things over and over again, it seems normal. I know people say $1 million isn't what it used to be, but if you have $1 million in your bank account right now, you're doing very well, okay? It is still a big number. If you're making $100,000 a year, that's still a big number. The sales number has always been, if you're in sales, you make 100 grand a year, you're doing great, okay? Maybe not on Wall Street, maybe not your hedge fund investor, but your average person out there, if you're thinking in terms of 100,000 I make, $1 million in the bank, you can then really appreciate when they're talking in the trillions of dollars, people over 61 and the value of the equity in their home. Now, these are large numbers, and those numbers to be able to tap into during a recession, during, a pandemic, like we're going through now. The Great Recession that happened, that's what they're calling it now, the Great Recession that happened in 2008, right? It's better than blaming the mortgage broker, which is what they did at the time, or blaming the Democrats because they wanted to have the poor people get loans. I mean, I heard some just unbelievable stuff. But right now, this is what's happening, which is why reverse mortgages for seniors is probably a pretty good idea if you are of a mind not to get out there and just spend your money. If you're looking for money in terms of putting it away for a rainy day or helping somebody else out who doesn't have work within the family, the reverse mortgage product under certain circumstances is great. That's why during a recession, we see rates drop. We see people who have equity in their house take it out of their house. And because the seniors, the baby boomers, my generation, who got hugely wealthy on real estate. I mean, if you can look back, when I was a kid in 1955 is when I was born, right? From 55 to 65, which was the middle to late part of that baby boomer era, real estate prices in this country were so unbelievably low, and you were lucky to sell your house to get the amount of money that you paid for your house. That's the way real estate used to be. But from 65 to today, now granted it's a long time, the increase in real estate value, also the inflation, also a million other things that cost a lot more, has been really, truly amazing. And now that the baby boomer generation has gotten into those into those age groups where over half of them now are over 62 years old, they can take advantage of reverse mortgages, take some of that equity out, put it back into the economy where it belongs. Country needs it. Country needs employment. Country needs a lot of things. One of the main things, and we were talking about it off air, is we need an end to the pandemic, or at least a playbook by which we can go, okay, by such and such, this will happen. By such and such, I can do this. Right now, we don't have that, and that's very disconcerting to most people, especially people who are older. We often talk about younger generation and the people who are new to the home buying market. Well, today's show, at least this particular segment, we've been talking about older Americans, what they have in their house, and how difficult this particular pandemic is versus other recessions when they were younger. This is the time right now where decisions have to be made long term. going to get out of the employment market, going to get out of the housing market, maybe sell a house. All of these decisions to be made now are important to you, and the reverse mortgage is one of the ways by which we can help in the mortgage industry. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you very much for listening. Thank you very much for tuning in to the show. We're on a number of great podcasts. Daryl, can you run down the list of those podcasts for me if you have them there?
Yeah, I've got the list. It actually is on the floor over here. So
okay, I know it's iHeartRadio. I know it's Spreaker. I know it's Google Music Play. I know it's
Stitcher. Yeah.
Right, exactly. The big eight, they call them. And if you want to see this show, go to YouTube, Jeff Barton, The Mortgage Voice on YouTube. And all of these podcasts and the radio show. And also we do a LinkedIn and Facebook on a daily basis called The Mortgage Minute. The information is up to date and it's current. Most of the time it's confused. I sound like Dr. Fauci here because it's changing, and it's changing every day because we just don't know what's happening in the employment world. We just don't know what's happening in the COVID world. But a couple of things we do know is that we have a great guest on the show, and she is here to talk to us about what is happening in the real estate world as well as in the mortgage world. It's Connie Hernandez joins us from PMA. Connie, how are you?
Hello, Jeff. Thank you for having me on the show, and thank you for that introduction.
Sure. Thank you. Thanks very much for coming on. Give us your idea as to where you think the real estate market is in your area, and if it, is good real estate market, bad real estate market. How are people showing houses? What's happening?
Well, for the situations that we're all dealing with this COVID-19, it absolutely has been an experience. It's constantly changing, as you just mentioned. Business is still happening. I'm happy to report that there are still people looking for homes. There are still people that are really interested in taking advantage of the interest rates that are low. So with that being said, we have to work with those changes, and they can sometimes become a bit challenging. We always have to make sure that we're taking all the precautions necessary. And CVAR, which is the group out here that handles managing the real estate officers, and there has some really good classes for the loan officers as well. But life is changing. I've been around for quite some time, as you know. And the face-to-face meetings just aren't happening as frequently. Right. Very seldom do I meet a client now face-to-face. Zoom seems to be the more effective way to conduct business these days. But for the most part, the rates are still great. So there is still a huge refi boom. The challenge is, as you know, Jeff, if you're refinancing to do a rate and term, it's an awesome opportunity right now. But if you're considering taking cash out, you most definitely will have to meet some stricter criteria with your credit, with your loan to value of your property. And, with that being said, that makes it more challenging for those with less attractive credit or high LTV on their property. So it's a time when things are being cautious, I think, but for the most part, I think most of us are hanging in there.
Yeah, you know what? I think there's an issue here, as there was years ago when we had the last Great Recession. People who need it can't get it. And I think that's very much true. If you have some credit challenges, or maybe there's issues with your particular job, maybe it's a little bit more tenuous than the bank would like or the lender would like. But to take advantage of these particular low rates would actually help solve the problem of too much cash going out every month, not enough coming in. How do we get to that, whereby we are really helping the people who actually need it, as opposed to only the people that can qualify according to, the stricter guidelines?
That is the $1,000,000 question, Jeff.
Yep. I agree. It's the $1,000,000 question.
Absolutely the $1,000,000 question. I can give you some of the things I've been doing with some of my LOs. Well, actually,
Great.
all of my LOs are following the simple protocol that we're doing is if people really need the cash out for their property and it's going to make a difference, we try to work with their credit. You know, there's the Experian Boost that will help with that particular FICO score. There's quite a few things that people can do to improve their credit, which will give them a much better chance of getting a decent rate if they
Right.
really do need that cash out. You know, unfortunately, there's some things that we have a little bit of control on. There's some things we have absolutely no control on, such as if they go into a forbearance. That
Right.
is probably the most challenging and confusing part of this whole ordeal that everyone is going through. Fortunately, there are a few lenders out there that, you know, we are approved to do business with under Malibu funding,
Mm-hmm.
and that will do a refinance for someone who's been in a forbearance as long as they meet the criteria. Most important thing to keep in mind is you have to bring your loan current. It has to be a situation where you cancel your forbearance, and the money that you've used to bring your loan current, you have to be able to source and show that those were your funds, not a gift, not a loan. So in those situations, I have been somewhat successful in helping some of our clients
Great.
because, you know, they did need the help. Things were a bit shaky at work. Some of them, their situations were resolved, so we were back to being able to revisit their loan. But again, you know, there are so many of us out here that want to be able to answer your question.
Right.
And before you decide to do something like do forbearance, make sure you fully understand what you're getting into and make sure you can most definitely get yourself out of it, because extending a forbearance from 3 months to 6 months, that may not be the right solution for you. You may be in more trouble than when you started.
Yeah, I agree with you 100%. I think talking to somebody who would have your best interest in heart. I know that everybody says that, right? Right. We're the best service. We care about you the most. But realistically, unless you know, if you're just looking in a panic mode and, oh, I can't pay my bills this month, I got to stop paying the mortgage, thinking it through, figuring out maybe that isn't the best course of action, and then talking to a professional. How would you go about talking to somebody? Because people are panicked right now. If they're thinking either they've lost a job or they're about to lose a job and the bills are too high. Everybody knows what that feels like. At least I do.
No, absolutely. I mean, if people are in this, obviously, you have to keep food on the table. That you have to take care of your household, keep a roof over your head, at least through this wave of turmoil. If you are in a situation where you have lost a job, or both incomes of the household have been drastically lessened by whether loss of a job or just less work hours, then you do at that point need to talk to the bank about the forbearance and be able to maintain your credit if possible. But definitely at the beginning, talk to the bank about the possibility of, if you do have to do a forbearance, can you at one given point, whether it's 3 months or 6 months down the line, can they and will they be willing to put those payments that you were not able to make at the due date at the back of the loan? That would be really, I think, the only solution for people that need an extended period of time for help financially. And some of these banks are willing to do that. I do know some of the banks that are servicing these accounts are willing to do that, but you definitely have to ask that up front. And that might take a bit of pressure off.
Connie, shout out your phone number. You're giving great advice, especially you sound like, somebody that you could talk to easily about these problems within a household, or the best course of action. If it's not the forbearance, maybe there's some other solutions. Could you give people a way to contact you, please?
Oh, absolutely. Thank you so much, Jeff.
Sure.
My name is Connie Hernandez, and my office is in downtown Covina. A way to reach me would be my office is 626-918-2419. My direct number is 626-422-2017. I'm happy to answer any questions that anybody may have. And many times, Jeff, as you know, we've been around long enough where we're not necessarily looking to do a loan for you, but you definitely want to be available to answer your questions in the best way possible.
I agree 100%. Connie, thanks very much once again for coming on, enlightening and educating both myself and the people listening to the show. Thank you very much.
Thank you, Jeff, for having me.
Thank you. I'm Jeff Barton, your voice in the mortgage industry. That was Connie Hernandez from PMA.
You're
and
listening
we'll be
to
right
The
back.
Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening to the show. Thanks very much for tuning in. We are on 8 of the large, what do they call them? I can't even think. Thank you. Daryl's got the list right in front of me. They're podcasts, of course. And if you could read those for me, Daryl, I'd appreciate that.
We're on Apple Podcasting, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Okay, very good. Thank you very much. And as I said before, earlier on the show, we're on YouTube. Jeff Barton, the Mortgage Voice. And this, as well as 6 years worth of shows are there, hundreds of shows. During the pandemic, we've also picked up LinkedIn and Facebook. We do a mortgage minute each and every day to try to update us to what's happening. There's a lot of changes, a lot of lenders who've come in and out of the marketplace, trying to offer new things to the consumer. It's been very difficult, and I know a lot of consumers out there are waiting for the days when we can look to new lenders, new products. In that vein, with us first time on the show is Danielle King from Axos Mortgage, and I really appreciate her coming on. Thank you very much, Danielle. How are you?
I'm great. Thank you for having me.
Thank you very much for coming on the show. Okay, can you just give us a little idea as to what your company does? What is your niche? How do you fill the needs of the consumers in the lending world?
So we're actually a super jumbo lender. So our loan amounts go to $30 million, and we do have a minimum loan amount of 510 401. We're an exception-based lender, so it gives you greater flexibility with underwriting, and we can do expanded property types. We offer 3 terms, 5, 7, and a 10-year ARM, and we do offer interest only on the 5/1. We're doing some interesting programs like a cross collateral.
Right.
That's when a buyer has a home that's either free and clear or has a small mortgage on it and would like to purchase another home and come in with little or no money for a down payment. We'll simply cross both properties with one lien and either make a 90 or 100% financing deal.
Okay, on that.
Go ahead.
On the first loan, let's say I've got a property and I, have 80% equity, but I still owe 20%. Does that 20% take a backseat to this loan when you cross collateralize, or are you subordinating to that first lien on that particular property? How does it work?
We usually would like to pay off the first.
I see.
So if there's an existing lien, we'd like to pay it off. In some cases, we will let the loan subordinate to us, but that's on exception basis only. As long as it makes sense, if they have a killer rate at 3.5 and they don't want to pay it off, we get it. We'll let them subordinate and we'll move forward.
Money available. Give us an idea of what your cash reserves are and the amount of loans that you're currently doing on a monthly.
So for cash reserves, we're looking for a minimum of 6 months reserve.
Okay.
And we're also doing foreign national loans. We're doing non-warrantable condos. We're also doing commercial and multi-family lending. We'll close in entities. So if you want to close in an LLC, we can do that. We do non-owner properties. We have no max cash out.
Now, are these commercial loans or are these residential loans?
They're residential, but we
Right.
do have a commercial department,
Okay.
and we can do anything over 4 units. We call it multifamily. So we'll do multifamily as well.
Well, you got a lot of products out there. And is this new for you guys? This is your space, has been your space for some time. Did you take a little hiatus during the beginning of COVID and now you're back in full force? Or have you always been lending?
We're actually a bank, so we never
Okay.
shut our doors down. We just
Right.
got such an influx of business when everyone slowed and shut down for a little while. We weren't advertising at all.
Right.
We were so swamped with the amount of loans we were getting.
Well, that's a good problem, I guess, unless it isn't. I mean, I know that when you get swamped like that, and I think the entire mortgage industry is swamped right now, what happens is everybody gets overworked, the underwriters, the setup people, the closing department, and they're all tired and they all need a break, and they all need to, most companies need to hire, and it's very difficult to hire right now. So I totally understand it, but again, it's a luxury problem, right?
Right. It's a good problem to have right now.
It's a good problem to have, because I know many people who just aren't working at all. Where do you see the market heading for your product? And the other thing I wanted to ask you is, most people want to know a little bit about the rates. What are your rate ranges and things like that?
So our rates are a little bit higher than agency rates because we're
Right.
portfolio.
Of course.
So our rates start in the 5 on a 5/1 arm, and they can go up from there depending on if it's foreign national buying a hobby farm.
Right.
They could get up into the 6s.
I see. It's still not too bad, right? I mean, when you're considering the size of the loan, the risk that the lender is taking, and speaking of risk, how deep do you get into ability to repay? What are the documentation for that?
So we are a full doc lender. We do
Okay.
offer bank statements, but we require 2 years tax returns on most of our products. On the bank
Okay.
statement, obviously, we have a 12-month bank statement, and we do not require tax returns on that.
Tell us about that program a little bit. I know that there are some competing interests out there from different lenders. How do you guys work it?
So our bank statements, I'm maxed at a 55 LTV, which is quite conservative.
Right.
And we use a 40% expense ratio as long as it's not a product service business. If it's a product service business, then I use a 60% expense ratio. It's not my most aggressive product, so
Right.
I don't do a ton of it right now.
Right. Okay. Tell us a little bit about yourself personally, since I don't know you all that well, although you seem incredibly knowledgeable about not only your products, but it seems like you've been in the business a while. Is that true?
Yes, I've been here at Axos, which was formerly B of I Federal Bank. I
Right.
started here in about 2010, and we started the whole portfolio before TRID, non-QM lending, and no one knew who we were. So
Right.
back then we were Bank of Internet, and then
Right.
we switched to B of I Federal Bank, which is now Axos Bank, and I've been here since then.
Well, we did a ton of business with Bank of the Internet. We had some great success with you. I have a couple of loan officers, as you know, Malibu Funding, the company that sponsors the show that I work for. They have about 70, 80 different loan officers in a number of different states. And going to go to the Bank of the Internet at the time, and even today, it's an answer for a lot of situations that just don't have answers right now.
Right. We're definitely, you can't get a loan at Wells or
Right.
any other bank. We will definitely take a look at it, because if it's too complicated, most people will turn it away. And we like complicated borrowers with complicated tax returns.
Right. Right. And that speaks to the, I guess, the need and also the expertise of the underwriter, because these all have to be handled individually. There's no cookie cutter loan here because they're all different and they all need special treatment in terms of their underwriting skill.
Correct. These are all handwritten underwriting. So they take a little bit longer. They're about 3 to 5 days, depending on how many tax returns and K1s we're underwriting.
Right.
But we usually turn around in 72 hours.
Hey, could you do me a favor and shout out your phone number, a way by which people who are listening to the show might be able to call you directly, if that's okay, and talk to you about any of these things you brought up today?
Sure. You can reach me at 760-707-6261.
Thank you very much for coming on the show. That went by really quick. I want to have you back again to see what the progress we're making, both in COVID and also in opening up more lending. Thanks, Danielle. Thanks for coming on the show.
Yeah, thank you. Thank you for having me.
My pleasure. That's Danielle King from Axos. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Thank you very much, everybody, and welcome back. I'm Jeff Barton, your voice in the mortgage industry. We are on 8 different podcasts, the big 8. Yes, we are. And Daryl, do you have that list in front of me? I know I should remember it. I should write it down, but I don't. I know it's great. Great. Excellent.
Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, radio.com, and YouTube.
Okay, if you go to YouTube, Jeff Barton, the Mortgage Voice, it's the same address on any of those podcasts. So if you're out there and you want some information about mortgages, there's not that many shows that do it. I know there's a few more now than there were when we started doing it about 6 years ago, but the information that changes on a weekly, especially during COVID, is something that you've got to stay abreast of, especially if you're trying to buy a house or you want to sell a house or you want to do a refinance. We're also doing Mortgage Minute on a daily on LinkedIn as well as Facebook. You can catch us there again, Jeff Barton, the Mortgage Voice. With us again today is one of our favorite guests, comes on about marketing, and especially in a time like now, I thought it would be a good idea to figure out how best to not only to reach people, but how are we doing it? Again, with us is Jamie Knight from Firecracker Agency, and I appreciate her coming on the show. Jamie, hi.
Hey, Jeff.
Hey, how's it going? Oh, pretty good. Yeah, very good, actually. So let me ask you a question. How's business? How are you reaching the people you need to reach? And what's the best way, I guess, a business can do business in a situation that they find themselves in for the last 3.5 months?
Well, so kind of two different questions there. But I'll start with the second one first about what's the best way to really be doing things right now. And wholeheartedly, it's improvise as much as you can, right? So don't be so stuck in the way that you used to do business or you've always done business that you can't pivot to other revenue streams or other types of marketing that you might be doing. So just a general lesson, what I've seen is the companies during COVID that have improvised, that have made changes, that have anticipated things happening like closures are the ones that are still open, and the ones that didn't aren't. So there's that. Another thing too, it's really important when you're marketing right now to, you want to be sensitive about what's going on, but it's very important to stay neutral. I've talked to a lot of people, and I'm down in Texas, and so, here, I mean, I don't know, it gets this way everywhere, but it's very political.
Yep.
So it's really important that no matter whatever your thoughts are about wearing a mask or not, or any of that, to just keep all of that out of what you're putting out to the public.
I agree.
Consider it, that kind of thing.
No, that part I agree with 100%. Go on. I'm sorry, I'm interrupting you.
Oh no, it's okay. We don't have the best connection. You're a little faint, so I wasn't sure if you were asking me something else. But But one of the perks, though, one of the good things that's happening from a business marketing standpoint is that everybody's on their phone. Everybody's on their phone so much more. They're home, they're driving less, all of these things that are resulting from quarantine, it's showing up because we're seeing so much more time spent on our devices, right?
Right.
So one of the things that's been happening for my clients, all of our online lead generation, especially on social media, on Facebook and Instagram, is just going through the roof. You know, I've got clients in the oil industry and real estate industry, and all of our Facebook ads are just killing it since COVID started. So I'm chalking that up to, you know, the market's obviously pretty good right now,
Right.
but also just all the spare time people are spending online buying stuff.
I agree. Give me an example of what you do on Facebook for an ad. Is it 5 seconds, 20 seconds? What kind of content are you looking to give?
You know, again, every business is different, but content-wise, if you've got a really strong video that is, you know, Facebook tells you still that like a video that is 3 minutes or more is going to get more views, but I find that when you look at that, it's really only the first 10 seconds that people are actually watching. So I've never quite understood that metric that they suggest, but a really strong 15-second video that's just going to pique someone's interest enough to get them to give you their email and their phone number and say, I'd like to learn more. So maybe up to 30 seconds, you know, somewhere between, I think 15 and 30 seconds are what's performing best for all my clients. So, and it doesn't necessarily, it's great. Like I have one client that I work with that does commercial mortgages, and we put his videos out, and those are very product specific. So they're about his fix and flip loans, or they're about, you know, the single family 1 to 4 loans. And then we run ads specifically for those. And those are effective. But what I'm seeing also for another client that does investing in like property funds, what we're doing for them is just a quick 30-second message from the CEO that's more like kind of gives that appeal and like trustworthiness. And then it's a little lead, these lead generation ads are so great. Pops up a little form, and most people's devices are auto-populating their name and their number and their email anyway. So it's just a couple of clicks, and then you get that lead. It's working great.
No, that's great information, and I too agree. Why does Facebook say that about 5 minutes or whatever, 3 minutes? It seems ridiculous. I don't watch a video that much and all the way through ever. I catch it 20 seconds, I'm done. It just makes no sense to me.
Right. I wonder if it's not self-serving, you know, if they say, you know, because they want more people spending time watching these videos. But, you know, I run these campaigns with this content all the time, and definitely the longer videos. I mean, nobody's even watching all the way to the end at all.
No, so. I mean, the radio show, this particular one that's on YouTube, it's an hour. I rarely, if ever, have found somebody to watch it all the way through. Never. It's just, you know, they see what they want to see and they leave, and that's the way, kind of the way it is. Are you finding other social media outlets as valuable as Facebook?
Well, so Facebook still, people keep wanting to give it an early retirement, but it's just so massive. Like everybody's on it, you know. So especially if you're trying to reach a demographic over 35. I mean, it's just Facebook is by far the most essential thing. But Facebook owns Instagram, right? So when you go to set up your Instagram ads, you set them up through the Facebook ad manager, and you can choose your placements. You can choose, and when I say placements, that's if you want to be in Facebook feed, if you want to be in Facebook stories, if you want to be on Instagram feed, Instagram stories, all the different types of placements they lay out for you. And so an incredible way of saving money and getting a lot of reach right now is to set up your ads and just set them up to go to Instagram stories. Instagram story ads right now are by far the biggest bang for your buck.
You know, I've been getting inundated with real estate and mortgage ads on Instagram. It seemed to hit last week. I think I got, I don't know, 15 or 20 within a span of 2 or 3 hours. I was shocked. I was like, what happened? Somebody opened the door and let everybody in?
Well, that, and also you're definitely like hitting everybody's filters as far as like your things that you like and you're associated with online. And so, you know, Facebook, since the Cambridge Analytica debacle and Facebook got in so much trouble, they've eliminated a lot of the targeting that you can do. So you don't go and target people by their income level. And really with most things, especially when it comes to real estate, you got to do the ads in what's called a special ads category. So you have even fewer targeting options than you do in other industries, like if you're just trying to sell, like, you know, shaving razors or something. So in special ads category, really all you can target is part of the world. I think you can choose your state, your country, you can do that. And then the only other thing is you can choose interest, right?
I see.
And so Facebook based those interests on other pages that you're associated with. So for you, I would imagine you're getting targeted for every possible real estate anything that anybody puts online.
I think that's true. Jamie, shout out your phone number. We're at the end of the 10. And so I want to have people who need your expertise to get a hold of you. How do they do that?
Sure. Well, so my website is firecrackeragency.com. And my phone number is 817-318-6744. I just had to get a new business line this week. The other one kept getting inundated with a bunch of spam.
I hate that.
Office line, 817-318-6744. Call me, and I'm doing a lot of consulting right now.
Great.
Just hop on a call with somebody for 30 minutes and tell them everything they could be doing better, what could help them out. So I'd love to talk to anybody.
Jamie, thanks very much for once again coming on, illuminating and teaching us about what the heck is happening, especially in the changing environment we live in. Thanks very much.
Yeah, no problem. Anytime.
Thank you. That's Jamie Knight of the Firecracker Agency. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Okay, thank you very much. I'm Jeff Barton, your voice in the mortgage industry. Welcome back to the show, and thanks very much for listening. We are here each and every week. We're on 5 different stations, 3 different states. We're down in Albuquerque, New Mexico. I want to say hi to them. And by the way, in Albuquerque, I am searching and I am emailing and I am asking for help from the real estate community to have somebody or a group of people come on every week to tell us about what's happening in your community. Now, I can read all I want, but I need to hear it from the mouth of somebody down there who's in the business. I know it's booming. I know that real estate prices are going up, and I know that new home construction is selling like gangbusters. I know all this from what I read. What I don't know is the interaction between you, the realtor, and the consumer out there looking to buy a house. How is that experience? What's happening when you meet a client? How are you meeting clients? Today, we're going to talk to some a real estate agent here in Southern California about that. And to that end, let's talk just a little bit about the consumer and buying houses. Now, the financial component is all about the ability to repay, and can you prove you have a job and that you will keep your job through the funding of the loan. These are the main elements of the financial sector. But for the real estate community, seeing properties. Now, I happen to have a couple of listings myself. I never do, but I currently have a couple right now. How are people contacting me? They are contacting me via the telephone, the internet, Facebook, texting, Instagram, a lot of different ways by which people can contact the realtor. So that means that for me, all of these different and varied sources by which information can be given must have access to the property itself in full color, beautiful pictures, or whether you marry them all together and have a virtual tour setting. People want to have the information at their fingertips on the device as well as on the platform that they choose, not the one that I choose. Gone are the days by which they have to call me, make an appointment. No, 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 no. You've got to make it easy and available. And the tricky part today is once you get engaged with someone who's interested in the property, how can you get to the next step, i.e., seeing the property? Most of the virtual tours that we're doing, and I assume that in the marketplace we'll ask again later, it's very similar. Virtual tours or a guided picture tour or any number of ways by which you can visualize and see the property is followed up by a request to see the property in person. Most of my properties, of the two I have, I don't say most, they're vacant, so it's easy. If it's not vacant, how are you getting into the property? As you as a consumer, are you out there? Are you seeing it in person? And are you nervous? Do you get into the property and go, oh, I shouldn't touch anything? Do you want to wear gloves? Do you wear masks? Does the realtor provide you with those sort of things? How is it working for you out there? In my particular situation, I have little packets made up at the door because it's vacant. The agent, as well as the I guess the buyer and the buyer's agent go to the property, and at the door is a packet of hand sanitizer and my card, and they leave their card, and they take their shoes off because the carpet's new that they put in, and they walk around the property. So they're not touching anything. They may turn on a faucet or flush a toilet or something like that, but there isn't stuff around the house to touch and worry about. But if you are somebody who has, you know, a house full of furniture and you've got people walking around there, what happens in between the showings? What happens after the showings? Does the seller come home? Do they do a major cleaning? It's really important to understand that prior to bringing the client to the house. If you're a person out there wanting to look at a house, understand that there may be some guidelines and rules. I joined recently a pool. Where I live, it opened up, albeit briefly. Looks like it's going to shut down again, but I joined this pool crowd, and they have every other lane, and it's very well organized. And that's what I'm trying to get to. How they did the protection during obviously the COVID right now. How do you protect people from touching each other, from spreading germs, from masking up? They did it great, and it was easy to understand, and it was organized. And I think when you are a seller or you're a buyer, you have to begin to think, okay, how am I going to go see this property? And then in terms of your own personal way of doing it, and then following the directions by which the seller or the agent, whoever it is that's taking you to the property has. And that's really important for your comfortability, for the comfortability of the person who owns the property, and for the agents involved as well. Nobody wants to get sick. We all want to buy and sell real estate. Heck, I'm in the business, and business is pretty good right now. It's not to the levels that it was maybe a year and a half, 2 years ago, but it's close in terms of the real estate market. So these are the things to think about when you go and see a property. How do you talk to your agent? How do you talk to your mortgage broker? Are you looking to the online resources available out there? Everybody Zooms now, everybody FaceTimes, everybody does WhatsApp, everybody does, I don't know, there's 100 of them. There's, what's the other one? I call it Rainbow, but it's called Marco Polo. It's another one out there, another where you're just in front of there, you can trade messages back and forth. I actually like it in a lot of ways, because if it's done properly and you have a real relaxed way by which you can talk to one another, it can be done really well. And most people are getting excellent at it. When we first started this, I had comments about, hey, you know what, the guy on CNN, the guy on Fox, the gal over there on MSNBC and Fox Business, the gal over there, they all need to either relax or get better lighting, or, you know, because they were all at home and everyone was trying to figure out how they look best. Well, now it's pretty good. Most people that I see in the interviews, even in a Zoom-like setting where you have 3 people on the show, so the main viewer sees the 3 people, but the 3 people aren't in the same room, even that's gotten pretty good. So I think that this has really advanced what we're trying to do in real estate as well, because when I talk to a client now in the mortgage world and they call me and we want to have a discussion about their finances, I can do it face to face. I have easily adaptable technological items that I can extract or get information from them to be able to upload into the mortgage application, to be able to talk to the lender, to be able to interact, as well as looking at the house together as we talk about the comparable properties in the neighborhood, to find out how much money they, one, need to buy the house, and two, how much money they can afford based on their ability to replay and their FICO scores. So I think we're in good shape in the real estate business. We were set up for this. We hadn't gone 100% to this yet. Now we have the main excuse, i.e., we have to do it. Having to do it, making sure that you have a plan by which to see the property once you do the virtual tours and all the pictures online, and working with the seller and the seller's agent, as well as your agent, to make sure that the home is as less contaminated as possible, by meaning that it's not a lot of touching, but all of these things in place really improve the quality of the experience for everybody, because nobody wants to get the coronavirus, and that's paramount. But life isn't going to stop, and we can get through this in really good shape, especially when we're talking about showing properties, selling properties, getting into that new home. I have some people that are extremely excited because they want to get out there and start looking at property. All right, let's talk about a couple of the things that I wanted to get to. CoreLogic delinquent loans is an interesting part of the equation. As everybody knows, we had forbearances drop last week to their lowest level, about 400,000 people in forbearance, down from about 460,000, right? 450? Yeah, something like that, 460,000. Anyway, which is good news. It means that people are getting back to work, or they're being forced back to work, which brings us to, hey, what happens at the end of July when we're going to see some issues with renters? We're going to see some issues with getting kicked out, with all that kind of problems that you have if you can't pay your rent, right? I mean, you might get evicted. So we may have some extensions in California. We may have some extensions in New York and Florida. But what happens at the end of those extensions in September? Everybody's pointing to September, where we could have how many massive millions of people who get evicted because they can't pay their rent. I think we will work on that. I think this will be something that'll be good for the country, because both sides will want to try to please renters within the market. Nobody wants to see people on the street. And then what happens? You can't rent the property anyway because nobody has a job to rent it. So if you're a landlord, you want to see those people remain in the property. You just want a way by which you can pay your mortgage and maybe get some assistance from the government. They're working on it. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for tuning in. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.